Welcome to Main Street Minds with your host, Amish Munshi. This is where industry leaders and seasoned pros share their secrets to success beyond limits. Let's dive in.
Hello and welcome to Main Street Minds. Today we have a very special guest, Matthew, with us all the way from Austin, Texas. And he is in a perfect setting on a Friday with a beach right in the background. So I'm glad we could actually capture all the fun moments you have along with the business aspects of everything you do. So yeah, looking forward to learning about how you reach the success where you are today. You Matthew does a variety of different things, all the way from investments, and he's a broker himself. So there is a lot to learn for us. And Matthew, I'll open up the floor. Introduce yourself.
Hey, I appreciate it. Yeah, man. Thanks for making the space. And to all the listeners, thanks for being here. I'm excited to provide value any way that I can. I love to meet and connect and learn and try to pass on whatever I can. I've been doing it for 16 years. I'm motivated and inspired, and I just feel blessed to be here today.
Sweet, perfect. So tell us a little bit about your journey. How did you get started in real estate?
Really, it started from my mom,
Sweet.
and she was a single mom, and she raised my brother and myself, and she moved from Cleveland, Ohio to Austin, Texas,
Yeah.
um, in the 90s.
Mm-hmm.
And she was literally cleaning. I remember she was cleaning houses. And by the time I turned 17, 18, she had a rental portfolio of maybe 15 or 16
Hmm.
houses.
Mm-hmm.
And so I was able to see what's possible, how somebody would do that, and what's required and what it looks like. And yeah, I got two kids and I'm married and I'm running the business, and that's hard by itself. And she
Yeah.
did that as a single mom. And I've said this many times, but I mean, that's kind of like, I hadn't heard anybody who's ever had a good excuse after seeing that, and what she could
Yeah.
accomplish, especially in the United States of America. So that was a blessing. And then I got my real estate license when I was in college. I was 18 years old, and I'm 34 now. And it's been a journey. I've worked at all different companies and aspects of the business, always hyper focused on wanting to be a student of the game, but also wanting to own and invest in real estate myself. And so, long story short, full circle, I went and got a master's degree in real estate from Texas A&M University,
Sweet.
and started from houses to mobile home parks and RV parks and laundromats, and I still own a lot of those properties. And then in the last couple of years, we started buying multifamily.
Mm-hmm.
was very patient and didn't buy anything when it was really competitive and rates were really low, and I just couldn't figure out how the deals would pencil. So me and my two partners, Alex and Robert, which I've known my whole life, and we just kind of were like buying these other type of assets where we could find motivation. And in the last 3 years, we started buying bigger deals. Um, we actually just put one under contract 2 days ago, but
Mm-hmm.
we're really zoned in on San Antonio, Texas, buying properties that have good operations and they're performing well, but they have bad debt.
Mm-hmm.
So our goal is to acquire 3,000 doors in San Antonio, maybe a sum in Austin, as the deals permit and the numbers get a little bit better. But just aggressive, man, and really outside of that, on a personal, business side, like I try really hard to just be a resource. I care about people. I take people's calls. I put up my balance sheet for people. I'll partner with them. I will talk to brokers with them. And it was something I was always looking for, but never really found unless maybe you paid for a community, which I have no issues with that. But I just try to be someone that will be around and brings good energy and positivity. And I've been kicked in the teeth from not really from real estate as much. I mean, it's been challenging, but from some other publicly traded investing. A lot
Yeah.
had some big losses, and now I'm blessed to be able to have an opportunity to acquire. I mean, me and my two partners, we could acquire like 200 million this year. We've already done about 80, and then like I said, we just got one signed up yesterday. So now we're hitting the pavement, attracting investors, sharing what the deal is, and that's a kind of a long run around. But like, man, I'm
No, that's
passionate, and just there's such a cool window right now to be buying deals.
yeah, this is the time to acquire, right? This is the phase of acquisition, and if we can secure good financing right there, we can get a few. There was a lot of investment that happened that shouldn't have happened in 2020, 2021, and all of that is just materializing right now.
Yeah, man, and I did a podcast earlier today, and I'm just kind of, you said open conversation and sharing, and
Yeah,
I just wanted to point out, and I really don't have a dog in this fight, but a little bit I do, because it's a little bit challenging to raise capital right now, because I
yeah,
think a lot of people are scared. And just one thing that resonates with me is like, everybody played a part of these deals that were going bad, right?
yeah,
It's easy to be an LP and to blame your GP, but the LPs have just as much blame, in my opinion. I mean,
yeah,
they put up the money, they looked at the deal, they fueled the deal,
yeah,
and so it's easy to sit back and judge the operator. But it's like, hey, did you go look at the property? Did you go tour the property? I would hope it's a lot of these GPs that had bad deals. It's not like they didn't tell people what their loan terms were or this or that, right? And
yeah,
so everybody got into this frenzy, and now everybody's gun shy when it's actually the time to be doing it, the time to be jumping in.
yeah,
And so I'm not gonna. I know one thing for sure. I'm not gonna look back in 3 to 5 years and say I wish I would have bought more, because I'm doing everything I possibly can, uh,
yeah.
and not just buying to buy, but the deals. When you really get into it, the deals are here, man.
Yeah, yeah, it's for the taking, and especially if, being a broker, you probably have much better access to the better deals.
Yeah, I mean that my brokerage is single family based,
Hmm.
but I do have good access, because in our market, at least, there's 7 to 10 brokers,
Yeah,
and I've known all of them for 10 years because I wanted to acquire deals,
yeah,
so I know them, and they're not
yeah,
hard to get to know.
yeah. That's great. So tell us a little bit more about the San Antonio versus Austin market. Like what are you observing right now?
Man, I'm convinced that San Antonio is maybe the best, but one of the best markets to invest
Hmm.
in. A lot of people don't think about this. I don't know
Hmm.
if you have, but it's the seventh largest city in the
Hmm.
United States of America.
Yeah,
It's very affordable. Like, we're buying properties for 80K a door, 70K a door.
yeah,
The newest one's a really nice one. We're buying it for 98. But in Austin, it's 140, 150, 160 for not
yeah,
nice properties.
yeah.
And San Antonio's rents aren't that far off of what they would
Hmm.
be in Austin. But Texas in general, we don't have these crazy high insurance premiums that you get in California or Florida.
Yeah,
We do have the taxes, but to buy these deals at 80K a door with $1,100 rents, and you're buying them for cheaper than the current owners bought them for 5 years ago.
yeah.
Um, and yeah, I mean, I'd love to buy in Austin, but the deals that we look at there, they turn into like 5-6% cash on cash.
Hmm.
If you get lucky and are able to get selected for the deal, in a
Hmm.
sense. But these ones we're bringing out in San Antonio, they're 7 to 10 cash on cash year one,
Yeah, yeah,
and I just want to bet on the cash flow right now, because the appreciation play wasn't where it didn't work out very well for everybody.
yeah, yeah. Makes sense. So. So you did mention you mainly are currently like, are you still acquiring multifamilies or are you acquiring other assets as well?
Right now, multifamily,
Mm-hmm.
I will always look at every deal and every opportunity, but I've personally learned for me that it's all about understanding where we're at in the market cycle
Mm-hmm.
and having your approach based on that, right? And so right now, like the approach is people that bought in 2020, 2021 that have to sell.
Yeah.
And there's a lot of them out there, and most of those deals are multifamily.
Yeah.
In a year, who knows? Like, say they had some kind of legislation and they said no more RV parks or something like that, then maybe we'd go to RV parks. So just
Yeah.
depending on what's the opportunity based on the market conditions is how I
Mm-hmm.
think about it. But every deal is
Yeah.
different, right? If
Yeah.
someone brings me a deal, it's like I might as well look at it and try to understand it.
Yeah. And do you do like value add or do you want the stabilized assets?
A mix. I mean, like the
Okay.
ones we're buying right now, the goal is not to go and crank a 2 million into it and sell it in a couple years. But we will put money into it and we will add value, but just over time, like we're just trying to keep these things in cash flow.
Yeah, makes sense. So, so what are some of the financing options that you are exploring right now? Like, are you using local banks or uh, what are you using? What are you seeing in the market like right now?
Man, so good timing for this question for me because this deal that we're doing right now, I think it's about as good as it gets. So
Mm-hmm.
we're assuming the debt,
Wow.
it's 4.34% interest
Mm-hmm.
fixed for 6 years.
Oh, sweet.
And we're buying it at a 6.7 cap.
Yeah.
So I just don't know. I mean, that's pretty sweet. So
Yeah.
the loan balance is 35. We're buying it for 39. So it's a $4 million
Sweet.
equity check, but then we're getting 3 million for capex and reserves and everything like that. The last couple deals we did assumable debt as well, and we bought
Mm-hmm.
rate caps. And if we were to go and get a new loan, I mean, it'd probably be 5.25 or 5.5.
Mm-hmm.
So the assumable debt route, if you can get the right structure, and for insight on that, like people might be thinking, why would this guy be selling if he's got 6 years fixed at 4.3? Well, it's because he's got other deals. He's got 7,000 doors,
Yeah.
and some of those other deals are on these other terms, and so he's kind of, I don't know what the yeah. So hey, you might have a good analogy for this, but I haven't thought of the best analogy. But it's like you're flying a plane or you're you're on a boat and you're like tossing stuff off to keep to keep it going.
Yeah, yeah,
So
exactly.
that's
And that's some of the better deals because you still get the better asset and you don't have to worry about all the financing issues or with with what's going on right now.
right, right. Yeah. So he's actually offloading the important stuff because
Yeah,
he's
and
trying to
that
keep other.
unfortunately that's where it is right now.
Yeah.
The other 7,000 door asset might not even sell. Like even if it's like 100 doors, like 70 of those 100 doors they might not sell because if it doesn't pencil out with their existing financing, there is no chance it's going to pencil out with the new financing.
Right. Exactly. So I guess if you can get a $4 million check, then it can buy him a year or two, maybe. I don't know.
Yeah, yeah. Sweet. So, tell us like how many doors do you have right now? How many assets are you managing?
We use third party management.
Okay.
It's until recently, it's pretty diverse. I mean, I have 4 RV parks. I've got two
Sweet.
laundromats. I've got 60 houses. I've got a couple little 10, 20 unit apartment complexes.
Mm-hmm.
And those are a hassle to manage, man. They're good properties, but what I've learned through all that is I just never buy stuff like that smaller stuff again. Um,
Yeah.
and I would argue that those are harder to manage than these other ones that we're buying now.
Yeah. Yeah.
And then outside of that, we've got a 216 unit. called Marbach Oaks,
Mm-hmm.
and this is in San Antonio, and then we have a 452 called Mission at Medical, and
Okay.
the one that we're under contract on is a 396 unit called Indigo,
Cool.
and that's actually the best location and the best condition of all the properties that we have,
Yeah.
and it's the newest deal, and so it's a beautiful thing, man. If you can do it right and have the right people, I mean, real estate just gets a little bit better every
Yeah.
year. You know, the connections get better, the debt gets better. It
Sure.
just
Yeah. And how much are you looking to raise right now, and what is the expected returns that investors, anybody that's interested, uh, just
yeah,
trying to share some of that information upfront so that before they reach out, they have some basic expectations.
yeah, man, I love it. I love it. People want to check it out. I can give them all the underwriting and everything. But
Sure.
what we do is 80-20 split. Unless you're going to write $1 million plus check or you have a
Mm-hmm.
group that will do that,
Mm-hmm.
then we give a 90-10.
Okay.
And with the 80-20, we're looking at 7 to 9% cash on cash year
Sweet.
one. We actually have a 4x multiple on
Mm-hmm.
this deal and 20 plus IRR. The goal is to refi it in year six and sell, when people start buying 5 and 4 caps again. Uh,
Yeah.
and if you do the 90-10 split with the $1 million check, it goes up to like 8 to 11 and 5x equity multiple. And
Yeah.
the equity multiple is so high because of the low down payment, right? Like
Mm-hmm.
typically to buy these $40 million deals, you typically need to bring 12, 15 million to the table.
Yeah.
And we're half that, because
Yeah.
taking over the debt.
Yeah, yeah, makes sense. And so, outside of everything that you do at work, tell us like what do you like to do outside of work?
Yeah, man. I mean, I love to be outside. I don't go to an office. Like I'm always making calls and talking, and you can see me around town just walking and
Yeah,
talking on the phone. Like I just like being outdoors. I like getting sun. I got
yeah,
two little boys, and
sweet.
I wrestle with them, and
How
I'm
old are they?
6 and 5.
Oh, sweet, perfect. Yeah.
And I really, as far as like other things I'm passionate about, I'm like just I don't know if the word's obsessed, but like I love I like history a lot, and
Mm-hmm.
specifically I love the American Revolution time period. And so I'm like watching like this show called The Sons of Liberty. I'm reading about
Sweet.
Hamilton and Aaron Burr and Jefferson, and I'm always trying to teach my kids a little bit about that. And um, I heard this on a podcast, and this is for me personally. It
Mm-hmm.
resonated, and he's like, the most important thing that ever happened on this earth is Jesus Christ coming here. And he
Mm-hmm.
said the second most important thing was the American Revolution. And I'm like, man, I mean, things just at that point, the whole world changed. Like, and it's just fascinating to me.
Mm-hmm. Yeah, makes sense. Like it's just amazing, just that whole concept of democracy that started like multiple centuries ago, like what it's able to bring to the table in this world.
Yeah, and I feel like there's an American spirit that's in all of us
Hmm.
that are here, that like there's something that we believe in and stand for, and some of that gets lost and over time, and we get we just start going down the money making path, which it's important, but like that's not what those guys died for and fought for.
Yeah, yeah, exactly. So, in addition to that, like, do you currently like partner with other people, or like, or are you the sole GP?
I have two partners that we're called TR3.
Okay.
But we're entrepreneurs, man. So we just want to buy good deals. We want to plug in. I
Mm-hmm.
invest in other people's deals as an LP. We have not partnered on a GP structure yet. We've typically just kind of gone to that fund of
Yeah.
funds model, which is at the end of the day, it can kind of be very similar.
Mm-hmm.
But open minded. I mean, I'm signing on loans with other people and doing deals with other people and
Sweet.
just trying to find people that it's I have learned, and this, like you've got to really vet your partners, and Nobody's
Yeah.
perfect. Like, I've been a bad partner, I'm sure, right? Everybody says like
Yeah. It's a
partner,
learning experience.
yeah, right? Like I never had bad intentions with it, that's for sure. But like, um, so like you got to vet them, but then just be real clear on what the roles and expectations are. And it's a lot easier with my current partners. We've known each other since we were little kids, and like,
Hmm.
dude, we get in fights every day, like in a good way. On
Hmm.
like, I want to do this or that, and like we need to
Hmm.
get and
And
the
that's the
best
important
goal
part, right? Like having
is
a variety of ideas, and if it's one person trying to do it, things go faster, but maybe it's going in the wrong direction sometimes. With
totally.
having multiple people together, it's always everything gets checks and balances are in place.
Yeah, yeah. So I'm open minded. I really believe in being an entrepreneur, and why
Hmm.
we all get into real estate to kind of not have a job. And so
Yeah.
you can get into real estate and you can create a job for yourself, but be the entrepreneur. That's why we all do it.
Yeah, yeah, makes sense. So yeah, so as we come closer to the end of this episode, are there any other points that you would like to like share with the audience?
Just I really do care, man. I want to help, and like if people
Hmm.
call me or reach out, I'm gonna do whatever I possibly can.
That's a wrap on today's episode of Main Street Minds. Want to share your journey with our audience? Head over to mainstreetmindspodcast.com/guest to apply.